Welcome, this is Simon from Strategize Financial Modelling. Today I'm going to discuss the challenge of managing your company's legacy spreadsheets based on best practice financial modelling. I'm going to present a simple financial model example such as the following. As you can see, we've got our cover page here. I'm now going to move to the table of contents and just give you a quick breakdown explanation of the model. Assumptions, our main outputs of the income statement, balance sheet, cash flow statement, then a simple dashboard summary. At the back of our model we have our appendices, our ancillary worksheets such as the model import sheets from our source financials, lookup tables, and then the error checks, sensitivity and alert checks. For a start, I'll show you the assumptions worksheet. This presents us the basic mechanics of how our model is presented. As we're doing monthly reporting, we're going to be showing our model on a month-by-month basis. So hence we'll have our model with periodicity of monthly. We have 2 years of actuals, so hence we have 24 actual periods. I'm going to be showing you obviously our current reporting year, which is the budget year, which will be 12 periods. I'm now going to take you to the income statement. Now, as I've discussed in the article, it's imperative to present your model in a clean and clear, concise manner, having varied font sizes and colours. So obviously income statement's the main heading title, and we break it down to gross profit, EBITDA, EBIT and NPAT, and then obviously our respective elements of the income statement are in a smaller font. One important thing that's often overlooked with building a best practice financial model is the importance of having error checks. So for example, July 2011, we want to check that our EBIT number of 194,470 is actually what our source budget numbers are telling us. So we can quickly check that. One of the beauties of this model is that we can easily move from budget numbers into actuals as the year progresses. So for now, we're obviously the July 2011 year is month is budget, so we're going to be checking our budget worksheet, and as we can see, 194,470, which ties exactly to the computer number in our financial model. So it's most important that we build plenty of error checks into our financial model. We can just do another check on August 2011's NPAT net profit after tax number, 151,013.1 against our budget number, which is correct. Moving across, similarly with the balance sheet, once again, current assets and non-current assets, current liabilities, non-current liabilities, etc. They're all presented in a larger font size, which presents the financial model in a very clear and concise manner for the financial model report user. And once again, as I discussed with the income statement, it's imperative that we have error checks. So for example, total assets for November budget month, we have in our model about 3.5 million in total assets, which we have computed in our financial model. Obviously we want to check to make sure that correlates with the number in our source financial budget model, which we received from our budgeting department, and that is correct. And similarly with our cash flow statements, we want to be certain that the numbers we've arrived at match up. So we'll look at our February 2012 budget number for investing cash flows, which is 0, and we'll check with our budget number, and that's 0. We'll do another one, obviously operating cash flows, we'll have numbers in it, 56,000 in operating cash flow for November 2011, check with our budget number, and that's what we tie to with our budget numbers. And now I'll quickly show you the summary dashboard, which presents our financials in a very clear and high level presentation. The application of such as a waterfall chart is very powerful diagrammatical presentation to executive management of how the company is faring, and as you can see, obviously our revenue is the key generator of net profit after tax, whereas on the flip side, obviously our cost of goods sold is the driver of a dilutive net profit after tax. And similarly, we've done the same on this in this annualized dashboard, present our free cash flow. Okay, so now we want to present, as you've seen, we're currently showing, for example, for July 2011 budget numbers, but however, it's the end of the month for July 2011. We now actually want to roll in our actuals for that month. Now, this is the beauty of this financial model. We're able to seamlessly apply actual numbers into the financial model while still maintaining the budget numbers for the rest of the year. So for starters, we're going to go to the table of contents, time series assumptions. Now, as I've discussed, we've got 2 years of actuals, but now, which equates to 24 months of actual periods, but now we're going to have 25 periods of actuals. So we're going to change that from 24 to 25. Now don't worry about the errors, we're going to rectify that in a moment. Budget periods, we're now going to go from 12 down to 11, remember, because we have our July 2011 actual numbers. Now we're going to go up to the data, edit links. Now our model has not just the budget numbers but also the financials. Now I'll just quickly show you our actual numbers. Obviously currently we don't have anything because when we built this model we were applying budget numbers for the 2012 financial year. So we're now going to update this model import sheet to reflect the July numbers. So we're going to go from 2012 financials to 2012 July 2011 financials. And as you can see, we now have actual numbers which we've received from our accounting department for the 2011 financial monthly reporting period. We are now going to go, I'll take you to the income statement. As we can see, we actually have our actual numbers for 2011. And as you can see, instead of showing previously the number of 484,000, we're actually now reflecting, because this is an actual month, actual financials of 389,000 for the month. Now, evidently for executive management, they're not wanting to troll through the whole financial model. So just quickly, we can go to this dashboard summary, and as we can see, our waterfall chart has been reflected to update that. Obviously, the 2012 financial year is obviously 1 month of actuals and 11 months of budget numbers. Just to be sure, we can obviously go through our income statements. And we can see that we have no errors for our 2011 actuals. Likewise for our balance sheet, and the same for our cash flow statement. So cash flow statement for 2011. So this is how we can manage our legacy spreadsheets without having to continuously reiterate and build a new financial model from month to month. How we can move from monthly budget numbers over to actual numbers.